Speaking of that, let me go to my first guest. I see him prepping in the background. You look great, Warwick. Getting the tie straight, and you're in the poly colors. That's awesome.
How are you?
How you doing? You doing okay today?
I'm okay, and you?
I am doing well. I am doing well.
Good.
Better that you're joining me. Warwick Powell. Warwick Powell is adjunct professor of Queensland University and Technology, chairman of Smart Trade Networks Group of Companies, and president of Data Integrity and Supply Chain Association Inc. And Warwick, I learn something from you every time you come on the show. I always appreciate you joining me. How you doing today? I'm glad you're doing well. You did answer that.
Well, I am actually doing better because I'm here.
Well, that's always good to hear. That's always good to hear. Warwick also is a prolific writer, and he writes articles all the time, and these articles are just great. Two of them I want to discuss. Now, these articles come in the context of Donald Trump being, well, I guess he's going to South Korea tomorrow. And there's an expectation that he's going to meet Donald Trump on Thursday, basically tomorrow. So that is a highly anticipated meeting. People are eager to see what that meeting is what's going to come out of that particular meeting. Now, in the light of that, you wrote two articles. One, Lessons from Keynes and Versailles for Multipolar World. In fact, let me show them just so the audience can see them. They're on Substack. Definitely check out Warwick's Substack channel. You will learn a ton, every bit as much as I do, because I read all of his articles. The other article is this one, Illusion of American Leverage. This article is fascinating, by the way, because in this article, you kind of point out that regardless of all of the boisterousness and everything else that the U.S. is coming with in preparation for the meeting, Trump is like, I don't know if I'm going to meet Xi. Okay, I'll meet Xi. And then you got Scott Benson coming out. Yeah, the farmers are being hurt, but, I'm also a soy farmer. I'm hurt by this also. It's like, are you serious? But you have all of this boisterous talk coming out of the United States in lieu of this meeting. And you point out they have no cards. And yet they're posturing as if they do. Go into that. Detail that for me. Like, make your case. Despite the U.S. posturing, why don't they have any cards?
Look, this goes back to the situation on the 2nd of April when Donald Trump first announced his Liberation Day tariffs. And I published a piece on that day, which actually, in a sense, said, if anything, it's an invitation for the rest of the world to be liberated from American hegemony. And the reason I said that is because the structural transformations of the American economy over the last 40-odd years, together with the structural evolution of the global distribution of productive capabilities, basically meant that the United States had a very thin real economy and a very top-heavy financialized economy. And push comes to shove, it's countries that ultimately have genuine, real use value, productive capacity that will call the shots. You can't eat dollars. You have to eat food. Economies are energy transformation systems. You actually, in the end, need access to energy sources. And as we know, in complex supply chains where there are a lot of sophisticated inputs that go into processes upstream before ending up in products downstream, without the technologies and the capabilities, as well as access to the raw materials, you're really going to be dependent upon those who do. And that was the situation. The other reality is that if you look at the composition of trade that has evolved over the last 20 years or so, we see that China in particular, so let's talk about the China-US trading relationship. China has progressively diversified its trading partners around the world to a point where prior to this year, the United States contributed about 14% of China's total exports. By the time of, by now, a few months into the on-again, off-again Liberation Day tariffs, the United States contributes a little bit less than 10% of China's total exports. In other words, the United States market is becoming increasingly less important as time goes by. That's a relative idea, of course, because it's a big economy. It's not an unimportant nation. So every time I talk about these things, I always have to remind people that these are relative questions, not absolute questions. But nonetheless, in the scheme of things, the US market is simply nowhere near as important as it once was. And China's ability to diversify its trading relationships, as evidenced by the last 10, 15 years, and more importantly, as evidenced by the last few months, shows that China's economic structure and its enterprises and industries can adapt far quicker to the new trading environment than the United States can. In other words, the adverse impacts on China, and there are some, distributional ones, some particularly trade exposed enterprises will be affected, obviously more than others. But in the end, China can adapt far quicker than the United States can. And China's got the materials. As I often say, not only does China have the cards, the reason China has the cards is because it makes the cards.
Well, you point out something in your article, and this is a bit confusing to me because it's in economic speak, but just to read it, and I want to get you to break this down for me. You said China exports to the United States account for approximately 2.8% of its nominal GDP, roughly 500 to 560 billion annually, based on an 18 to 20 trillion economy. So you're effectively
Yep.
saying China's economy is from 18 to 20
Yep.
trillion dollars, and that
Yep.
of that 18 to 20 trillion, the US only counts for 500 to 560 billion. And so this figure was significant in absolute terms, represents only about 15 to 20% of China's total exports. So in the
Yep.
sense that of all the exports that China puts out, this represents only 15 to 20%.
Yep.
And then you point out, you said, which reached a record of 328.6 billion in September 2025 alone, surging 8.3% year over year, despite the global headwinds. So you're saying, despite all of this, China's exports still grew 8.3% in
Yep.
spite of the tariffs and everything else that the United States was doing.
Well, not only did it grow overall, it did so whilst its exports to the United States fell. In other words, what
Interesting.
happened in terms of its exports to the rest of the world, it had to grow faster than the rate of decline of exports to the United States. And that's
Right.
what I mean by the ability to adapt and adjust. And, it's a difficult idea for many in the United States to get their head around, not because they're silly. It's because coming from a culture that has talked a lot about consumerism and the sort of power of the American consumer and the US dollar, there is a sense that the US consumer is the center of the universe. But clearly that's not the case. And it's one of these things where a nation of 340 million people these days, and let's not forget there's 8 billion people in the world, right? So 340 million people, it's about 4% of the world's population or thereabouts,
Right.
it has 14% or something like that of GDP. So it's an outsized GDP compared to population, which, needless to say, creates this impression that that without us, the United States consumer, the world would collapse. Well, clearly the world won't, and the world doesn't. If the lesson hadn't been learned already out of the experiences of the sanctions and all the rest on Russia, and let's not forget what's happening now, these last 6 months, isn't just something that's fallen from the sky out of the blue. This actually began in early 2018 when Trump version 1.0 launched the trade wars initially. Remember,
Right.
in March 2018, he said that trade wars are good and easy to win. Clearly, they haven't been that good, and they're not easy to win at all. But this has been an ongoing continuation of attempts by one administration and after another to strangle the Chinese economy. And it's done so on the basis of a false analysis of the importance of trade to the Chinese economy, number one. And number two, it has an overestimation of the centrality of the American economy as well. So when you underestimate one and overestimate the other, the fact that you make catastrophic strategic miscalculations is pretty much an inevitable consequence.
You go further in this piece. You even make the point of saying if the U.S. just says screw it, and we're going to have 100% tariffs, hell, let's say 300, 500%, let's take it to the moon,
Yeah.
and that all trade is cut off between the U.S. and China, that this is still not overtly significant to the Chinese economy, that they can effectively make moves to change, either, let's say, increase investment in regards to, let's say, infrastructure. They can move their trade over to other countries. I mean, China just signed a deal with the ASEAN countries over the last couple of days on the sidelines. They can, basically, your point is, China can jigger their trade relationship, not to mention investment, or even cut taxes. And that would effectively, let's say, leverage is the wrong word for it. That would minimize. Yeah, that would offset. That's a better word for it. Thank you. It would offset whatever they were going to lose from the standpoint of trading with the United States, meaning this is not overtly dramatic. You even make the point of saying if China wanted to take a nuclear option, they could dump the dollars that they have at their disposal, because the moment that trade is cut off, that necessity of those dollars become less relevant in regards to China's economy.
Yeah, look, and I don't think China will do that, I should say, but
you did say,
but when you think through the sort of theoretical possibilities, if there is no trade relationship between the countries, then you do wonder why a country would need to hold the foreign reserves of a no longer trading counterparty, right? You only have those dollars because you intend on using those dollars to settle accounts, particularly if you're importing things from the United States. And also if you're buying things in other parts of the world where dollars are accepted. Now, that has been, of course, part and parcel of the trading practice for the last 40 or 50 years. And we all know of the link that was created in the early 70s explicitly between the oil market and dollars. But even that's starting to come apart over the last few years. Oil trading has begun to take place in non-US dollar terms, and the Saudis have explored it. There have been some trials done. The Russians, of course, have been transacting in oil without US dollars, and Iran has as well. So the sort of strong link between the oil market and dollars has unraveled already. We're also seeing this in other commodities as well. So, for example, in the last month or so, there was negotiations between the Chinese iron ore or the steel industry, the buying consortium, and BHP, which is an Australian publicly listed company, which is a major iron ore miner and an exporter from Australia. And the negotiations went on for about a week. And they were about a number of things, but one of the features was that the future trade transactions would be settled in RMB, and that the transactions would actually also be priced in RMB. So on a major commodity like iron ore, we're shifting away from dollar dependency as far as a pricing mechanism and the settlement mechanism is concerned. So, now this pattern's happening anyway. It's being accelerated by all of these tariffs, because you've got to remember, in the last 6 months, American exports have actually fallen. Exports have actually fallen, contrary to the grand promises. The grand promise was American exports would grow, imports would fall, the trade deficit would shrink, but American exports have fallen, and in large part that's a consequence of other countries. Some reciprocal tariffs, of course, China, as well as countries starting to look for alternatives. Nobody wants to be tied into a system that is unreliable and where the key mechanisms, US dollars, are weaponized. So we've got an environment now where the need for US dollars for trade settlements is slowly but surely diminishing. And countries are now pursuing alternatives. I mentioned Russia before. Of course, we know that over 95% of Russia's trade is now settled in either rubles or RMB, basically, with a little bit of rupee and UAE dirham. But basically, they got forced off the US dollar system. And other countries are moving that way too. The swap lines that have been created between China's central bank and 30 odd, almost 40 other counterparty central banks in the world enables transactions to be undertaken and settled in RMB. We are now seeing countries issue RMB denominated bonds as a way of getting RMB, which will help them settle their trades with China in RMB. So Indonesia this week has just done that with the first ever tranche of panda bonds, or dim sum bonds, as they're sometimes called, and Hungary did so recently, about 2 months ago, and Russian oil companies, of course, do the same, right? So the Russian oil companies are raising RMB so that they can use RMB to settle accounts with Chinese counterparts when they are buying things from China. So all of this stuff's just happening. It's unfolding, and there's no big bang, right? That's the point. We've always got to remember there's no one day where you wake up and you say, oh, well, that's the end of the dollar. That's not how it's going to work. The dollar's still going to be important because the United States is a big economy, and the dollar's still relevant for everybody who lives and works in the United States, first and foremost, right? But it'll just be less important, which really means that I think the United States, if we can get a soft landing, will, in a sense, come down to earth and one day wake up and just be more normal as a nation instead of carrying on like an exceptional, something or another. But it'll just be more normal. I mean, that's certainly my hope anyway.
What happens if the U.S. does lose this the dollar as a reserve currency? What did he call it? I forget something privilege. There's a name for it to come to me in a moment.
Exorbitant privilege.
Exorbitant privilege, yeah. What happens if that exorbitant privilege goes away and we're 38, 40, let's say $45 trillion in debt? I mean, that seems to be a disaster.
There isn't a solvency problem in that sense, right? Because it prints its own money, right? So it's never going to run out. Its problem is it has a number of other dimensions. So it's not that it's problem free. I think the first problem it has is that if the United States dollar is less acceptable around the world only because no one needs it in the way that they used to or were willing to accept it, then the United States is actually going to have to earn foreign currencies to be able to pay for imports, right? And what that means is that the United States is going to either have to figure out how it can generate more exports to earn the foreign currencies, or it will have to tighten its belt. The United States' privilege, in part, has been that it's able to buy things from around the world by issuing what are essentially IOUs. That's all it is. So everyone else in the world has collected American IOUs.
Wait, explain that. You said they've been able to buy stuff by issuing IOUs.
Well, the dollar is an IOU, right? I mean, the dollar basically, currencies is basically a claim on something in the future, right? So, the person who has something is obliged to accept the dollar as payment, right? That's an IOU. I'll swap it for something. But other than its use as an IOU, the ability to swap it for something else in the future, you can't do anything with it. It's not like you can, run an oil refinery with it, or manufacture a car with it, or eat it. You've got to swap it for something, and so the United States has gotten away really with a system where it literally said to the rest of the world, "Look, just give us the stuff, right? Give us things that make our life better and easier, and in exchange for that, just take this thing that we basically issue ourselves. We'll sign the little IOU and give it to you. Look, you can use as many of these later." And of course, there's just more and more of them floating around the global system. Now, what do people do with it? Well, what do central banks do with it? So central banks are sitting on a pile of US dollars, and they're thinking, well, I guess I can keep some of that as dollars, which they do. And then they buy, other dollar-denominated assets, which are principally bonds, right? Because instead of holding dollars, which don't earn an interest, you might as well swap the dollars for a different asset, which does earn you an interest. And the beauty of the bond historically is that it's entirely liquid. It's as good as a dollar, except it earns an interest. And what a no-brainer. If I came to you and I said, look, you can earn 0.5% on holding a dollar, or I'll offer you 4% if you give me the dollar, and I'll give you a bond instead.
I
What are
take
you
the
going to
bond.
do? Well,
Yeah, I take the bond.
I'll take the bond, right? So that's what they've done. And of course, other things that you do with a dollar is you end up buying stocks, right? So that's helped boost the stock exchange. And why stocks? Well, because stocks are potentially an income earner, number one. Blue chip stocks are typically capital value growth stocks. And that's liquid, which means you can swap out of stocks whenever you want as well. If you need cash, you can swap out of stocks. Then what else do you do? Well, you start looking at real estate, so you buy real estate, or you buy into real estate trusts, or you buy some other exotic financial instrument. Right? So this is what countries end up doing when they've got surplus dollars. Right? This is great. This has been great for America. Um, you know, America as an economy as a whole has been able to get all sorts of things from the world on the back of this promise. How good's that? But of course, Donald Trump sees that the other way. He saw that as a trade deficit, right? Because he could only see one side of the ledger. For him, the side of the ledger that mattered was the money going outside of the ledger. He never actually paid any attention to the things coming in that Americans used side of the ledger. And
Wow,
right, I mean,
that's
the other
wild.
thing, by the way, that people do with these dollars is buy American services and goods and things like that. So whether it's paying for software licenses, um, uh, Hollywood, you name it. The
Well,
American
as you even
services
say,
sector has
stocks and
got
bonds,
it's got stocks and bonds and all of that. So
real estate.
so that's how the systems work, right? It just churns dollars. It's been great for the American stock market. And of course, because it's been great for the stock market, it's actually really good for the top 10% of American wealth owners, because 93% of stock market value is owned by 10% of American households.
Right.
So this system's fantastic. Now, who else owns bonds other than foreign governments or foreign central banks? Well, relatively wealthy people through various investment vehicles. They also trade in bonds. So from their point of view, they're earning interest as well. Right? So how good's this? Rich people are earning interest on the back of dollars that they've converted into bonds. The stock market's being pumped because people who've got a surplus of cash are pouring it into the stock market as a relatively liquid market. So asset values are going through the roof. I mean, if you tracked money supply growth and asset valuations, whether it's the S&P 500,
Mhm.
whatever it is, you'll just see these things map one to one against each other pretty much.
Why doesn't China drop bonds? That's something that you hit in your piece also, that at the point where this trade war was taking place. Because in the beginning of the trade war, China and the US apparently came to a deal. The US never really kept the deal and started still poking China, poking the bear, or poking the dragon, let's say. And China's response was the rare earth minerals. Why go with rare earths as opposed to, let's say, dropping some of the treasuries that they were holding?
Well,
The nuclear option, as you call it.
yeah. Look, the rare earths was, of course, a reflection of the importance of the material economy, and in fact, it really went after one of the dimensions of the soft underbelly, if you will, and it was
Mhm.
principally around the military-industrial complex. I don't think China's got any interest at all in radically disrupting, the normal real economy. In fact, quite the opposite.
I see.
It wants to be seen as a relatively responsible actor globally, which means it needs to conduct itself in certain ways. But it was an incredibly powerful, lever, and mainly because something in the order of about 78% of American military equipment relies on 78% of Chinese inputs, right?
Right.
So it was a very powerful lever because it went to the heart of the military industrial complex. In terms of the bonds, look, I think that there's a few reasons why China has no interest in, that so-called nuclear option. Often people use the phrase, they're dumping more bonds and all this sort of stuff. But I actually don't think that's been happening,
Yeah.
in large part because you haven't seen the yields fly through the roof in the way that you'd expect should a country like China seriously be dumping bonds. What's been happening, because obviously China's holding of treasuries has been slowly but surely diminishing over the last 10 plus years, and that largely happens because as those treasuries mature, China simply has no longer renewed them, with the next tranche. So when your bonds mature, you get your dollars back, basically. And what usually happens is that you get the dollars back and you recycle it into the next tranche of bonds, and away it goes. But China clearly hasn't done that. So it's let the maturing bonds go. It's taken the dollars, and then it's gone and done other things with the dollars, including, more recently buying gold, buying up oil, building stockpiles of this, that, and the other. But it certainly hasn't been buying more treasuries. So over time, its holdings of treasuries diminishes. The other thing it's used those treasuries for over the last 10 years is actually a security for the issuance of RMB-backed or RMB-denominated loans for Belt and Road Initiative projects. So this is what we call hypothecation, where you take a financial instrument like a bond and you use that as security against which you issue another a lot of finance. So China essentially used its massive holdings of US dollar denominated financial assets as security to create an RMB ecosystem from within a US dollar dominated ecosystem. So that's the second reason. It's been very, very useful to do that. The third reason is that China doesn't see any rational reason why it should seek to radically diminish the value of these assets, by which I mean the things that it might be able to swap these assets for in the future. Why would it do that, out of spite? Well, countries really don't conduct themselves usually out of spite if it means shooting yourself in the foot. That's a silly thing to do. And the last reason, I think, is that China, as I mentioned earlier, does see itself as a great nation that needs to conduct itself responsibly. And part of conducting itself responsibility is not going out of its way to oil the market. In other words, to basically create mayhem on the market, which of course causes problems for lots of other people. So China doesn't want to be responsible for creating those sorts of disturbances that could have ripple effects on many others in the world. They're the main reasons why China, I think, doesn't pursue that particular course of action.
You also pointed out that it would depreciate the value of the dollar by like 15-20%, which would damage the amount of money that China had in regards to the treasuries themselves. So let's say if they dump half, the dollar drops 15-20%, then the amount that they hold now has less value associated with it, not to mention everybody else that has dollars. Now, that's fascinating. I mean, basically, as you point out, a nuclear option, it screws over a lot of people. It's not just them getting back at the U.S. with the trade war.
Look, there's lots of unintended consequences and ripple effects, right? So I think China's mindful of the fact that you do these sorts of things and you do run the risk of catalyzing contagion in ways that you never intended. And it's been there and done that. It's seen how contagion in financial markets can get out of hand very, very quickly, particularly when you don't know what's connected to what. And what happened in 2008 is a great recent example of that. So I think China's just particularly cautious. It's conservative on these sorts of issues. It doesn't want to damage itself, which is one of the potential consequences. So that's first reason. Secondly, it doesn't want to be seen to be acting irresponsibly. And thirdly, in relation to that, it doesn't want to create unintended consequences on others, to a point where others will see China as acting in bad faith and acting in ways that cause them damage.
What are your expectations tomorrow in the meeting with Trump and Xi Jinping? If indeed the U.S. has no cards, and I would imagine on some level the U.S. has to know that it is not necessarily in the best position in going up against China in this. What does the U.S. want out of this meeting? What does China want out of this meeting? And what do you have? What are your expectations?
Well, I think at a broad level, and that's piece that you mentioned that I'd published a couple of days ago, which is the lessons of Keynes and Versailles.
Right.
That sort of sets, I think, a strategic frame, which is this idea that the victor needs to behave in ways that are very magnanimous. The lesson out of Versailles, which was the treaty imposed upon Germany at the end of the First World War, ultimately laid the groundwork for German resentment and impoverishment that then led to the political movements of the 1930s. And Keynes in 1919 saw that as a distinct possibility from what was an incredibly one-sided set of arrangements post-war. So the lesson out of that is that if you want to secure a permanent peace, victors actually need to behave in generous and not punishing ways. Now, that's a difficult thing to do because, of course, the first thing you want to do is punish, those that you defeated. Right. But you can see how Russia, in some respects, I think, has that issue in the back of its mind. It's trying to conduct its war in Ukraine in a way that has the space available for a post-war settlement that doesn't require this sort of total enforcement of a capitulation, because that breeds resentment and those sorts of things. You've got to, in a sense, think about how you rebuild after conflict. And I think China also has a very clear sense that the trend of our times, which Xi Jinping talks about a lot, is essentially the ongoing unfolding of multipolarity. Now, that's the trend. Where that goes, well, who knows? But you certainly can't push against the trend. What you can try and do is guide it, ride the wave, give it a bit of shape, and try to make sure that as these forces work their way through these complex systems, which is global economies, societies, and nations, that they don't leave too much damage in their wake, but also lead to some more constructive and positive outcomes. And so multipolarity could either be incredibly chaotic, or it could actually be a set of institutions that lays the groundwork for a future where indivisible peace becomes a much more powerful operating principle. Now, the only way you can do that is for those who are on the rise, or who are going to, in a sense, prevail, to behave in very generous and magnanimous ways. The vanquished, regardless of what they've done in the past, need to have a sense that they have a meaningful place in the future. Otherwise, you are breeding or laying the groundwork for resentment and ultimately ongoing instability. Set against that backdrop, what can we look forward to? I think China knows that it has the negotiating strength insofar as the transactions are concerned, but it's looking beyond that. It's looking to see how this set of events over the last 6 months, and in fact over the last 8 years, are part and parcel of processes that will shape what multipolarity looks like going forward. And China, I think, wants to see a future in 2 years, 3 years, or 5 years' time where there is open trade, where there is an ability for countries to coordinate and to collaborate, where the United States, as one of the major countries and economies of the world, is actually connected to the world and has a stake in the world's future, as opposed to putting up the fence and saying, well, that's not for me. And as a result of that, China has no interest in decoupling. It has said that from day one, and one of the obvious reasons, even though I think it could adjust to a decoupling far better and quicker than the United States can, China doesn't have a desire to decouple because, one, it incurs costs in doing it short term, but it undermines its own sense of what multipolarity needs to be in the future. It needs to be an inclusive set of arrangements, which means, you know, there will be a détente which enables the United States economy to function. There is no interest in impoverishing America. I've said on many occasions that an impoverished America is not in the interests of the world, mainly because when America's impoverished, it loses its ability to discover peace for itself, right? So it's no longer at peace with itself, and we see that already, and you and I have discussed that on many occasions.
Yes.
But it means it also projects that lack of peace outwards because it's looking for enemies and others to blame. And that's no good for anybody either. So China does not want to have an impoverished America. It wants to see an America that is actually prosperous. Often people in China will say, if I'm doing business with others, do I want to be doing business with poor others who can't buy some of the great things that we make? Or do I want to do business with wealthy others? Well, I want to do business with wealthy others. And I think out of all of that, we'll see movement towards a settlement of the trade situation. One last thing I'll say, I mean, I obviously haven't touched on any particularly specific points, which I guess we can go into if we've got a little bit of time. But I think the other thing that this rare earths process has shown, and this goes to the broader point, is that the nature of the distribution of political and economic power globally has shifted decisively. Imagine March 2018 when Trump first announced the trade wars. By the end of 2018, by the end of 2018, the Canadian authorities, at the behest of the American government, had arrested Meng Wanzhou, who vice president of Huawei and the daughter of Huawei's founder. Clearly an aggressive, incredibly aggressive move on, you know, a prominent individual of one of China's most important companies. Now, China did not roll out rare earth things then. One of the reasons, of course, was, you know, concerns around its ability to access helium, which the United States had. But I think also China simply did not believe that it had the capacity to pull it off and hold the line. It felt that it was still at that point in time too vulnerable. Today, 9th of October, it announced the export licensing regime. The United States went apoplectic. And it didn't change a thing, right? That regime is now in place. We're not arguing about whether that regime is going to exist in the future. We're simply arguing about when it will fully come into effect, what the terms and conditions are going to be, what the process and mechanisms, etc. That was never going to happen 8 years ago. It's happened today. And that tells you that China is now confident that it can go toe to toe. Now, China doesn't want to go toe to toe. The point that's been made is that China is a peer. And if you want to deal with China, you deal with it as a peer. In other words, as an equal and with respect. And having set that benchmark, I think we're now able to move forward with a lot clearer air. Rare earths, the discussion's going to be around how the export licensing regime will be implemented. Will there be white lists for fast tracks or fast lanes? How do people get on white lists? Will there be companies that won't be allowed to access the rare earths? We talk about the kinds of uses that will be permitted. China said, as a matter of principle, it won't provide permission for rare earths to go to military, production. Now, there may be some conditions around that, depending on, a particular application. China's also said that civilian and humanitarian uses will be uses that will always be allowed, subject to the licensing and the paperwork being done. And then you've got this big grey area in the middle, which is dual use. Right? What constitutes dual use technologies? Issue number one. How they are then to be audited. How do you ensure compliance down the track? How do you verify that license users are not, doing the wrong things? All of that has to be worked out. The other issues, go to companies on sanction lists. I wouldn't be surprised if many of these start to get ticked off, right? They're easy things to do, actually, though historically they haven't been done very much because the United States has never had to. But they are actually not difficult things to do. The issue around the port fees that are being charged on Chinese-made vessels and China's reciprocal response to that, I wouldn't be surprised if that gets cleared quite quickly as well. It's a relatively low piece of hanging fruit, and frankly, it doesn't do anything in terms of the United States' own ambitions to rebuild the United States shipbuilding industry, which ostensibly is the reason why this particular fee was introduced. So there's a lot of little things that exist there now, which the parties can, in a sense, work through and almost return back to the status quo ante. Fentanyl's obviously the other one. China is of the view that it's gone out of its way in terms of addressing some of the supply side concerns that the United States has. There may or may not be a little bit more effort done on that front, but and the sad thing is that I don't think the problem's a supply side problem. We've had 50 years of war on drugs now coming out of Washington, which has always been about tackling the supply side, and yet opioid addiction in the United States and overdoses and deaths have continued to rise. So clearly the strategic framework's been wrong. It hasn't actually worked. But, there you go. This is, an obsession. I understand why the United States government is concerned about fentanyl. It should be. But it's looking for a solution in the wrong place. But that's a different story.
When I hear guests like dealing with China issues talk this way, I always think to myself, and not just on China, Russia, Iran, etc. I often think to myself that how does a country that believes in win-win relationships deal with a group of sociopaths? Like, meaning we don't believe in win-win relationships. We believe in zero sum. And when Trump is going into that meeting, I guarantee you, Donald Trump is thinking of, how can I get an advantage? How can I get leverage? How can I win? Whereas China's going into that meeting thinking, how can we both win? I am always fascinated by that relationship. It's like somebody who plays Go versus somebody who plays chess. It's a clash of ideologies in the way that these things are being worked out. I mean, we'll see. I suppose we'll see. I mean, ultimately, I agree with you. But your thing is, there's not going to be, and we can close it on this, there's not going to be a broad trade deal set. If anything, they're going to deal with smaller.
Jamal. Look, I suspect not, partly because there hasn't been the time necessary for that to happen. The second thing is, and I'm just trying to interpret the ways in which the negotiators from both sides have commented on the discussions. Mm-hmm. The Chinese side has talked about a framework and a common and a initial consensus again. The American side has sort of talked about we're getting closer to an agreement. So none of that suggests anything other than some signposts. Now, they're not unimportant, but there simply is insufficient time, I think, for a comprehensive reconfiguration of the trading relationships to be documented and dealt with. When you're dealing with trade deals, they take months. Some trade deals can take decades to nut out. In fact, I read in the news today that a country in Southeast Asia and somebody else, just slipped my mind at the moment, concluded a trade deal that had been in negotiations for a decade. Right. So, there's because it's very detailed. If you look at the categories of goods, they're not broad brushed. They literally go down to 4 numbers. These are very granular descriptions of products, and trade deals go line by line, item by item. And so I don't think that that's the kind of discussions that the United States and China has been actually having. and so I don't think we're going to get that kind of deal.
That should get status quo.
Yeah, it's just 2 days of discussions does not deliver that kind of outcome. They're trying to solve, in a sense, the deal makers and the deal breakers, so that there is the space then for the work to be done at that sort of more operational level. But if you can't solve the deal makers and breakers, then you're never going to get to that next stage. So that's where I think they're at. They're trying to tackle these, things that could put a spanner in the works or can smooth a process going forward. A lot of it will involve winding things back to pre 2nd of April, status quo ante, and that's where I think we're at. That's perhaps not a bad outcome. It's 6 months on. We'll go a full circle. There's been a test of strength in a sense, and I think it's probably fair to say that the United States overestimated what it was bringing to this particular set of negotiations.
Oh, that's an understatement. That's an understatement. Warwick, man, like I say, I always learn something in these conversations. Thank you for this. Warwick Powell. I'm Warwick Powell. He's adjunct professor for Queensland University of Technology, chairman of Smart Trade Networks and Group Companies, and president of Data Integrity and Supply Chains Association. Warwick, you are fantastic. Thank you for this, man. You be safe, okay?
You too. Appreciate
Thank
your
you.
time.